and I would have told you this 3 to 5 years ago too, are two big bets, I think, at what we've become known for are crypto, and starting with Bitcoin, and then Tesla. Now, more and more people are on to Tesla now. We are not fighting the fight that we were in 2019 when, traditional Wall Street was saying they're going to run out of money and go bankrupt. They'll never be able to scale manufacturing. And here, today, in California, the largest auto market in the United States, Tesla's Model Y and Model 3 are the number 1 and 2 selling cars, not electric vehicles, cars, in the largest state for auto sales. So the next phase of this, though, is autonomous. And this will take Tesla from gross margins in the 20s to gross margins in the 60s or higher, because it's moving into really a software as a service model, transportation as a service. So pretty exciting. But, we've started publishing our models. Tesla was highly misunderstood. We published it on our model on GitHub, so you can find it there. And we've published 2 other models, again, very high conviction, misunderstood stocks. So Zoom is one and Roku is another. So I think that would round out the top 4.
Super interesting. You mentioned, have to ask, you mentioned Tesla. You all were an early investor in Tesla. I think you have somewhat of a public Twitter relationship with Elon Musk too, just having seen some of the back and forth. What are your thoughts, Cathie, Elon Musk?
Elon Musk is our Renaissance man. He's a genius, and we are so blessed. The world is so blessed to have him. And sure, he creates a lot of controversy out there and stirs things up. But, for Elon at least, there has been no such thing as bad publicity. It's publicity, and it all works. Tesla has not had to spend a dime in advertising. So I think social media has really worked for him. He's a controversial figure. What I love is he says exactly what's on his mind, and he's willing to go against the conventional wisdom. And again, in active management, that's what we need. That's what we need.
I couldn't agree more. And we've talked, people, associate you most often, Cathie, with public markets. Obviously, that's your bread and butter. But you've spoken over the past few quarters, as we've seen markets correct, and you started in public markets, you're starting to see that across private markets. You've spoken a little bit about what you call the arbitrage opportunity between the two markets. Many former VC darlings, the Robinhoods, the Coinbase of the world have gone public, and they've seen their stocks fall dramatically, in some cases more than 60% from all-time highs. But private company valuations, we're starting to see some correction, but have largely held up, at least in pockets of the private market. Who's got it wrong, Cathie? Public market investors or private investors?
Well, I think public market investors have it wrong for the most part because they're looking backwards, as I mentioned before. I think private equity or venture capital investors have it more right because they're looking out. They're looking to the future and they're looking long term. So our investment time horizon is 5 years, and we do that for public companies. Most investors are looking at 1 year. Well, if you take a look at the difference between linear growth and exponential growth over 5 years, it's night and day. The numbers will be very, very different. Whereas most investors are just looking at this year, and the base level, if you're comparing an emerging trend to a well-established trend, you're going to probably be much more comfortable with the established trend because you're not looking far enough to see the explosive growth trajectories. And it is interesting, even within the private markets, yes, we're seeing significant corrections in some companies' valuations, but not in the truly differentiated, highly differentiated. Sure, some of a correction, but in the public markets, we have seen 80% declines in companies. It's been shocking. I've never seen anything like it, and it makes no sense. So I think that the valuations in the private markets are more in keeping with what we think is going to happen long term.
Moving a little bit thematically, Cathie, to a space that candidly I'm not too familiar about. We don't have too much experience with the Titan. We do a little bit of healthcare investing here at Titan, but nothing in the gene editing space. And so I'm curious, genomics. You have exposure here in a big way through ARK. How would you explain genomics to a 5-year-old?
Oh, okay. So a 5-year-old. What I would say to a 5-year-old is pretend that the inside of your body is like a big puzzle. And no one's been able to put together this puzzle before. There are 6 billion pieces. You could probably wrap them around the world if you were laying them out straight. That's how complicated the inside of our bodies are. What genomics does is figure out what each of those 6 billion pieces does. Each has a special role in making our body function. And so genomics figures out what each piece means, and is also able to discern when something has gone haywire with one of the pieces of puzzles, like it's not being put in the right way. And with the new technologies, we're able to take that one little piece out of 6 billion and put it back in the right place. In other words, cure disease with gene editing. So that's how I would explain it to a 5-year-old.